Hello and welcome to a new episode of Coffee and Stocks. In today's video, we are going to talk about index funds and how you guys could pick your own index funds in order to keep increasing your money in the future to come. But before we get started, how about we get some coffee? Alright, so I just want to get one thing straight, and that I'm not a financial advisor, so please do not take my words as advice. Also, don't forget to drop a like on this video, as well as press that amazing subscribe button. And if you guys can't do both, just press on that subscribe button. Smash it, destroy it, kill it, do whatever you want to do with that subscribe button, but obviously just press it. Alright, so, we do have the YouTube $60 e-gift card winner. Let's go ahead and pick who it is. Who is it? Let's see. Congratulations to Dividend Diplomats. I have one major complaint about this video. Your channel name is Coffee and Stocks. Where's Starbucks or any other coffee stock on this list? Just awful. I'm kidding, of course. Excellent video. Way to go, featuring such a great dividend stock. Pepsi, one of my favorite. Always buy stocks as well. Keep up the great work, Bert. Well, Bert / Dividend Diplomats, you are the winner of the $60 e-gift card. Go ahead and send me a message through any social media that you see on my page, and I will give you this $60 gift card. All right, so there's one small little thing that I do want you guys to hear from Warren Buffett about index funds. Here we go. Ready?
We just go right into questions and answers, but I really thought that maybe we were giving a little bit the wrong lesson because all the questions would naturally tend toward current events. And so this time I went back actually to 1942 when I bought my first stock as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars, we had 9/11, we had the Cuban Missile Crisis, we have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776, and that American business, if America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And America works.
So one of the big things that he says is, if you put $10,000 in it back then, how much would it be worth right now with just buying it and not doing anything about it? He also says, it's like buying a farm and having the farmer take care of it, and then you just get all the benefits from it. You would get $51 million from it. So what he's saying is, obviously, index funds work. A lot of people don't really focus too much on that. That is mostly, comprised of stocks and bonds and all kinds of stuff. It does fluctuate, but it doesn't have the highest volatility that some of the stocks that we currently invest in, right? And I'm not a 100% index fund, purchase person. I only have one. And honestly, going through the situation that we're currently all going through with the pandemic and all that stuff, it's a smart choice to really go and look at it and do your homework on it, because in 20 years and 30 years, or 40 years, 50 years, when I retire and whatnot, am I gonna look at this and say, you know what, I made the right choice in buying this index fund? Maybe. So I think, me personally, obviously this is my opinion because it's my channel, right? I think I'm gonna purchase some index funds and I'm just gonna let it go. I'm just gonna let it go. Do your own thing. I'm not even gonna mess with it. I'm gonna reinvest the dividends and all that stuff, and then just keep getting more and more money. Now, one of the things, if you guys don't know what an index fund is a type of, let me zoom in. It's a type of mutual fund whose holding match or track a particular market index. It's hands off, right? So it's hands off, and you could build a diversified portfolio earning solid return using mostly this type of investment. That's because index funds don't try to beat the market or earn higher returns compared to the market averages. Instead, these funds try to beat the market, buying stocks or every firm listed on the index to mirror the performance of the index as a whole. So they kind of mirror the index as a whole, right? So they don't try to beat it, they don't try to get ahead of it or anything like that. I've actually read in an article before that, not even a high percentage of investors or like really smart investors can't even beat the markets. They honestly just match it at that point. And then, moving forward, how do you pick an investment, or invest in an index fund? So most of the things, like for example here on Motley Fool, it shows you 3 steps that you could do: pick an index, choose a fund, and buy shares. So picking an index, right? There's hundreds of different indexes you can try using index funds. Most popular one, S&P 500, obviously. But there's more than just that. There's small US stocks, which is Russell 2000 or S&P Small Cap 600. International stocks, MSCI, EAFE, MSCI, Emerging Markets. There's bonds, so Bloomberg, Barclay Global Aggregate Bond, etc., right? I'm not trying to make this video super long, right? So I'm just trying to get to the point because it is the weekend and no one wants to be, listening to my voice. Anyways, number 2, choose the right fund for your index. Once you choose an index, you can generally find at least one index fund that tracks it. For popular indexes like the S&P 500, you might have a dozen or more choices all tracking the same index. If you have more than one index, index fund option for your chosen index, you'll want to ask some basic questions. First, which index funds most closely tracks the performance of the index? Second, which index fund has the lowest cost? Because obviously everything costs. Third, are there any limitations or restrictions on any index funds that prevent you from investing in it? And finally, does the fund provider have other index funds that you're also interested in using, right? If you have all the answers to those questions, great, you're ahead of the game. Now, there's a lot of other, there's different things that you can invest in, not just indexes. Obviously, there's ETFs as well, and they also give you dividends and you could reinvest. But you definitely have to pay attention how much everything costs, because yes, obviously you're not taking care of it, but there is someone taking care of it, and that might come with a fee. But there is some free brokerages out there, so it might, you might just have a lot of fun just, getting huge returns. So buy index fund shares. To buy shares in your chosen index funds, you can typically open an account directly with the mutual fund company that offers the fund, or you can open with a brokerage company, with a broker that allows you to buy and sell shares of the index fund you're interested in. And to in a couple of days, when I'm back at making the videos again, I will be picking my top 4 or 5 index funds that I personally like, and I'll give you guys the reason on to why I like those index funds. Now, here's the thing: why invest in index funds? One of the main things: minimize your time spent. This is, so you don't have to wake up early and check the stocks all the time, so you don't have to deal with the stress that the stock comes, especially now that we have such a red market. You could invest with less risk. As you can see, red market again, huge volatility. It scares everyone. So this gives you a less of a risk sense, right? It has a wide variety of investments. It's a lot less expensive, obviously, because you have like a whole bunch of little chunks of a lot of companies, and you just have it in one huge pie. And then you'll pay less in taxes, obviously. obviously you don't want to pay too much in taxes, right? So index funds are quite tax efficient compared with many other investments. For instance, index funds don't have to do as much buying and selling of their holdings as actively managed funds, and so index funds avoid generating capital gains that can add to your tax bill. So that's pretty important to see, right? And it's also a lot easier to stick with your investing plan when you use index funds. You can automatically invest month after month and ignore short-term ups and downs, confident that you'll share in long-term growth of the market. Now, I do have another portfolio, and I just fund it. I just put a whole bunch of money in it, and then it has an automatic reinvestment. So it's able to buy more of whatever I already have in my pie. And obviously whenever I do get the dividends from that, I just reinvest it in, it's included with the funds that I put in, so it just increases more and more of my portfolio. There's also why not to invest in index funds, and a lot of people do want to see the pros and cons. Obviously you'll never beat the market, so your returns aren't going to be as huge. You don't have any loss protection. You can lose everything. Yes, just like in the regular market, you can lose everything, and you won't always own stocks you like, right? So if you want Tesla but you have NIO, it's like, but I want a Tesla and Tesla is just huge. Well, that's what an index fund is, and you should already be doing your homework before you even invest in anything. And obviously I'm not a financial advisor, so you should always do your due diligence and do your homework. Anyways, that was today's video. I will be doing another one, another video about my top 4 or 5 index funds that I personally like. Don't forget, everyone, to congratulate Bert or Dividend Diplomats for winning the $60 gift card. Bert, don't forget to send me a message, and I will get you those $60, and congratulations. All right, so I will see you guys next time on Coffee and Stocks.